Pablo, good to see you. How you doing? How you been? Tor, good to see you as well. Evening. How you doing? How you been? Abraham, good to see you as well. How you doing? How you been? JP, good to see you as well, brother. How you doing? How you been? Evening. How's everyone doing today? Sorry about starting live about 5 minutes late. Sorry about everyone. Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing? How you been? Good evening, Miles and CMF. Bull XRP, good to see you as well. How you doing? How you been? Okay, let's do intro disclaimer. And by that time, everyone's pretty much tuned in for the first part of the live. And there is a few things happening around the world that is disrupting the crypto market space right now. And we're going to go through essentially those things. One of them being, obviously, we're getting closer to April 2nd, which is tariff season pretty much for the rest of the world. And also, it's Trump and, essentially what he said today regarding Iran. The war scenario is also making the market space quite volatile. But that is something that needs to happen, as I said a long time ago. If you want to let everybody know tonight, Miles, in the US, we're back to 625. Or 625 on Monday, because your clocks go forward on Sunday. That's true. So if you're watching this from the US right now, CMF members, the clocks are going to go forward on Sunday, which will be 625 on Monday for everyone else. Good day, Miles. What are you cooking today? Mike, good to see you. How you doing? How you been? Good evening, Miles and family. Good to see you. Orphan, how you been? How's things? So, good day, Miles and CMF. Let's go, Mike. Welcome to the CMF Live if you're watching this for the first time ever. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles, and in this live, I talk about the most recent news happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for everybody to know about regarding the world completely transforming into a digital space. And this is episode 288 of the CMF Live. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live as well, which means if you ever have any questions, put it down in the comment section. We're more than happy to answer the questions you may have. Also, thank you so much to everyone from the CMF who has, if you're watching us on X CMF members, thanks so much to everyone who has liked this live, retweeted this live on X, and put a comment outside the live on X as well, and hashtag the XRP Army. And thanks so much to everyone who's watching on YouTube, who's also liked the live as well from CMF members. If you haven't done that, CMF members, just take a quick second to like and retweet this live if you're watching us on X. And if you're watching on YouTube, just drop a quick like as well. Beck, how you doing? Hello. Dennis, good to see you as well. How you doing, brother? How you been? George, hi, Miles CMF. Good to see you as well. George, how you doing? How you been? Good evening, Miles and CMF. Callie, good to see you as well. How you doing? How you been? So, the crypto market space is slightly disruptive, slightly volatile, and there are two main reasons for that, which we're going to go through on tonight's live. One of them, obviously, being the situation of tariffs that's essentially impacting the crypto market space. Still, because we are getting very close to April 2nd, and April 2nd is very well known as Tariff Day for the entire world, pretty much. Trump is going to be tariffing the EU, the UK. He said he might not tariff as much. Canada, Mexico, China, everybody's going to get tariffed on essentially 2nd of April. And the closer we get to that date, the closer essentially the market is going to be a little bit volatile when we get into that stage. On top of that, there are war scenarios that are still brewing up between the US and Iran. And neither one is backing down. Trump isn't backing down because Trump's not the type of man to back down. He's the type of man that says if he's going to do something, he's going to do it, and everybody should believe him because he does it. Iran also isn't backing down because they want to show that they are a strong country against the US, which is an absolute big laughable. I'll be very honest. I'm Persian myself. If anybody's watching this and thinks for some reason that I say Iran can't win this war, but I'm Persian myself, and I'm telling everybody the chances of Iran winning this war against the US is zero. It's about minus 1,000, the chances of Iran winning this war against the US. But this war is also essentially brewing up too much, and it's causing volatility inside the stock market, volatility inside the crypto market space today, especially. But it is something that needs to happen, as I said a very long time ago. The Iranian government is incredibly disruptive for the rest of the world, and something needs to be done about it. And Trump is essentially the man to take care of the situation. George, good to see you. How you doing? How you been? Kelly, good evening, Miles CMF. Good to see you. How you been? Pierce, evening, Miles CMF. Good to see you. How you doing? How you been? Now, the first one we are going to go through on tonight's live is regarding the situation on tariffs. So, crypto markets dip aimed essentially renowned inflation concerns and essentially the tariff situations. The cryptocurrency market has experienced significant downturns today, driven by increased inflation fears impacting investor sentiments. Bitcoin, Ethereum, and XRP have all seen notable declines today. Market analysts connect these shifts to a broader, essentially, economic concerns. Expert emphasizes the need for investor vigilance during such periods of market volatility. Bitcoin could also, a perspective coming out, Bitcoin could also essentially hit all-time highs before the end of the second quarter. A lack of clarity on US tariffs and recession concerns are unlikely to derail the potential rally of the crypto space. Still, the impact of inflation concerns has led to increased trading and higher market volatility. Bitcoin's recent dip affected by its essentially market capitalization, currently sitting at $1.66 trillion, while Ethereum is trading at essentially $1,880, reflecting a 6.1% decrease according essentially to CMC data. And previous market dips have shown parallels with the current situation, indicating a pattern essentially of volatility linked to economic conditions. And historical analysis suggests potential recovery opportunities as market adjusts. Essentially, experts expect market stabilization as investor confidence starts to return to the market space. Historical data points to resilience inside the crypto market space, showing recovery after similar challenges. Okay. In the most simplest way, essentially, the crypto market is very slightly volatile today. It's going to stay volatile probably around until April 2nd to see what the news is going to be. Now, the news of wars is also adding to the volatility inside the market space, but April 2nd, everybody should be prepared for that scenario happening because we all knew April 2nd was going to be happening. We've been talking about for the past week or so. But they're saying essentially that market sentiment for the crypto space hasn't gone away and is still increasing. Obviously, behind the scenes, there is a lot of things happening in terms of regulations, especially inside the United States, that is going to be that boost factor for the crypto space. And obviously tariffs are very temporarily inside the market space that's going to be affecting it. Now, crypto market cycles permanently essentially shifted. Crypto markets essentially cycles permanently shifted under essentially Polygon. So Polygon's founder has came out and essentially said that the crypto market isn't, essentially moving the same way it was, comparing to historical essentially patterns. And there's essentially a very good reason why the crypto market isn't moving the way it usually, essentially was moving around. And that's due to essentially the crypto market maturing, the amount of institutions coming inside the market space, the amount of regulations that are going to be added to the market space that are also currently added to the market space, and so on. And it is something that I said a while ago because it wasn't just my perspective, it was also Grayscale's perspectives, it's the Standard Chartered Bank's analyst perspective, Nicholas, who's an analyst from essentially JP Morgan. They've all had similar perspectives on the next wave of essentially clientele entering the market space is going to be institutional clientele. It's going to be all about regulations and institutions and banks, which does show signs that the crypto market space is maturing. And this is why essentially Polygon's founder has came out with this perspective. The 4-year crypto cycle that traders and investors have become accustomed to is no longer what's happening inside the crypto space because the crypto space is maturing. and that the crypto asset class in general and the participation of institutional investors is what's essentially maturing the crypto space. During a recent episode with Cointelegraph, Chain Reaction essentially said that overall speculative activity is down due to high interest inside the United States and low liquidity conditions, but it will rebound once rates are cut and Trump's administration settles its new law. They're essentially saying that, yes, we are essentially in a volatile market stage, and yes, tariffs are not helping the situation, and yes, the war scenario isn't helping the situation, but we've got to understand that, there is a massive clientele waiting to enter the crypto space, which is the institutional clientele. So it's not all doom and gloom, and the tariff situation, as even mentioned by Polygon's founder, who had an interview with Cointelegraph, said it's just temporarily. Once we move past the tariffs, the regulations will be there, and so will the institutions. He also added that while he expects a 30 to 40% essentially drawdowns between cycles and still expects the Bitcoin halving to have some sort of effect on the market space, the 4-year cycle is now less of a movement inside the crypto space. He said we've generally seen 90% drawdowns between cycles, which is very normal inside the crypto space. And he said, I feel that those drawdowns will be less essentially effective, and they will feel a little bit essentially more professional inside the crypto space, more mature, especially for the blue chip crypto assets. The Polygon founder concluded that once the uptrend resumes and the crypto markets experience a prolonged bull run, then capital will rotate from larger cap assets into smaller cap assets. US President Donald Trump's executive order that essentially established a Bitcoin street reserve and a crypto digital stockpile is one of the factors for the market cycles. He says it's essentially moving away from the 4-year cycle, and that crypto is no longer the retail essentially market space, but is becoming the institutional and bankers market space. And therefore, it's no longer going to be following its 4-year cycle scenarios. The advent of exchange-traded fund ETFs also has disrupted the market space by removing it from its traditional 4-year cycle period. And because ETFs are traditional finance products that do not give the holder underlying digital assets, these investment vehicles essentially prevent capital from freely rotating into other assets, which is very true. Macroeconomic pressures and geopolitical uncertainties also have disruptive effects on market cycles, as investors feel essentially risk on assets more stable alternatives such as cash and government securities or even gold. Why essentially gold is up is because it's an actual safe haven, unlike a particular digital asset inside the crypto space who sometimes pretends to be a safe haven. We all know what that asset is. Now, moving on essentially from the perspective that came out from Polygon's founder, which is a very correct perspective. And it's the same perspective that Nicholas has given out before from JP Morgan, and essentially Grayscale has given the same perspective as well, and a few other ones. But moving on from that to the FDIC. This is why I say it's not all doom and gloom inside the crypto space. There's a lot of things actually happening that are extremely positive for the crypto space behind the scenes instead. So this is essentially what's happening behind the scenes. Anticipated cryptocurrencies move finally comes from the FDIC. The FDIC, historically known for being an anti-crypto essentially department, you could even say, that tried to stop banks from essentially utilizing crypto assets, sent them 20 different emails telling them not to work with crypto companies, and even threatened their own employees. The FDIC, according to essentially one senator, threatened their own employees to essentially not say that they have been threatening banks. So they threatened their employees to keep their mouths shut so that senators and governors wouldn't know that the FDIC is threatening banks to not work with crypto companies. They were a part of Operation Choke Point 2.0 in the past. Now, on the other hand, the FDIC has came out and said they want to get banks moving with the crypto space. The U.S. Federal Deposit Insurance Corporation, the FDIC, has essentially issued new guidance that allows the FDIC supervised banks to engage in permitted essentially cryptocurrency-related activities without requiring any sort of approvals beforehand, provided that they essentially manage the risk involved in that particular asset they want to go for. The announcement detailed in the Financial Institutions Letter, which is the FIL 7 2025, also essentially the guidance from 2022 FIL 16 2022, signaling a change in the agency's stance on digital assets. With today's actions, the FDIC is turning to a new page on the flawed approach of the last 3 years, said the FDIC acting chairman Travis Hill. because the actual chairman of the essentially FDIC, just like Gary Gensler, left when Trump came into power, because both of those morons damaged the crypto space. He said, I expect this to be one of the several steps that the FDIC will take to outline new approach on how banks can engage inside the crypto, essentially blockchain-related activities in compliance with safety and soundness standards. The new guidance essentially confirms that banks can engage in essentially crypto-related activities as long as they implement essentially appropriate risk management measures. And the FDIC also noted that it will continue to collaborate with the President's Digital Assets Working Group and other banking regulators to improve policies essentially governing digital asset activities. So on the scene, we have tariffs that essentially impact the market space, which are very short term, and the long term tariffs will actually do very good essentially for the United States. Will make it a much more stronger country in terms of imports, in terms of essentially exports. But in the short term, we have the tariff situation or the war scenario with essentially Trump and Iran. In the long-term scenario, we have, the FDIC, for example. This is why it's not all doom and gloom. The FDIC, who was very against the crypto space, now coming out and saying that banks should start utilizing crypto assets, obviously understanding the risk before they get involved, but they're essentially fully green-lighted to start getting involved inside of crypto assets, which also goes back to what Polygon's founder said, which is that the next clientele, once again, is going to be banks and institutions, and therefore the crypto space is maturing and is no longer following its 4-year cycle. The closer we get to rules and regulations, the faster crypto assets with utility purposes can decouple themselves from Bitcoin's footsteps, which would be very great. Genuinely be the greatest day ever. That day will particularly be known as everybody popping champagne bottles, the day projects like XRP, XLM, XDC, HBAR, Cardano, AVAX, TON, NEAR, the list goes on, that they can decouple themselves from Bitcoin's footsteps because regulations are there, which means those projects can go into utility with all those contracts and licensings they have. Now, what we're going to be talking about next is Trump. We're going to be talking about Trump and his recent movement inside the crypto space. But before we go through the next news, let's go inside the comment section first, and then essentially we'll go through the next news. So let's go through the comment section first, and then we go straight into the next news. Let's see where we're inside the comment section. As I said previously, this is live, like always, and you can, essentially, if you do have any questions, put it down inside the comment section. I'm more than happy to answer the questions you may have. So let's see where you're at. Good evening, brother. How are you doing today? I'm doing great, Samuel. Good to see you. How you doing? Evening, Miles of CMF. Manny, good to see you. How you doing? How you been? Gameboy, how you doing? How you been? What is going on with XRP now not going up? It's not just XRP that's not going up. It's the entire crypto market space that's not going up. Genuinely, on weekends, the crypto market tends to go down. And then on weekdays, starting Monday, the crypto market tends to go back up again. But we've got to factor in two situations. April 2nd is coming around. April 2nd is very well known for Tariff Day, pretty much for the entire world, by Trump's announcements that came out about weeks ago, which I've also been talking about week after week regarding April 2nd coming up, Tariff Days coming up. Every country is about to get tariffed on April 2nd. So that is causing volatility. Also, the scenario of the US going into war with Iran and neither one of them backing down is adding to potential volatility to the market space. It's not just XRP that's going down. It's the entire crypto market space that is becoming volatile. But so is the stock market at the same time. And unfortunately, Bitcoin follows the Nasdaq's footsteps, even though Bitcoin is supposed to be a safe haven or risk-off asset. Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been? Evening, Miles and family. Good to see you. Ian, how you doing? How you been? How much percentage are you down? How much percentage am I down? Yeah, I'm not going to reveal that in any sort of a way. But what I can say is that I couldn't care less of how much percentage I'm down at all. I genuinely couldn't care less of how much I'm down inside the crypto space on my own portfolio. And the reason for that being is because I know everything that's happening now is short term, because I'm looking into long term. Short term is tariffs and the Iran essentially and US situation. Long term, I'm looking into essentially rules and regulations that are going to be happening. I'm looking at the SEC and the CFTC that's come together after a decade. They're going to be setting out rules and regulations for the crypto space. I'm looking at Wall Street, who's showing positivity towards the crypto space, helping blockchain companies go public for the first time. I'm looking at Bank of America's executives, essentially, that want to help blockchain companies go public. I'm looking at Citibank, who wants to create a platform similar to Binance and Coinbase. I'm looking at all these factors, essentially the SEC, the CFTC, the CFPB, the FDIC, the OCC, all pro-crypto, all coming together, the White House coming together to create rules and regulations. All the Republicans, even Democrats, are starting to turn towards crypto assets because they're realizing it's the future. So in terms of how much percentage I'm down on my portfolio, I couldn't care less, because I know that the assets that I'm holding have a very, very amazing future ahead of themselves. So short term doesn't really, essentially bother me in any sort of a way. It's long term that I care about. Hopefully this is the last of the shakeouts. Let's go, Shelly. Happy Pisces. Good to see you. How you doing? How you been? Crypto is like art, only value if people think it is. Basically, it's worthless, but because some people invest in it, it has value, but only you change it back to currency. Crypto is gambling. Incorrect, I would have to say. So crypto is like art. Incorrect. Crypto is not like art in any sort of way. NFTs are like art. They're actually used for money laundering. But the idea that crypto only has value if people think it does is incorrect. So there's a lot of people who might be inside the crypto space, who might not be inside the crypto space, that do assume that crypto has no value, and it only has value if people believe it has value. It's technically incorrect. So easiest way to put this is like this. You buy a token, for example, that's a stable coin like USDT or USDC. USDC, for example, is backed by US Treasury bonds, backed by US dollars, and backed by other essentially US yielding borrowing situations. Then you take a token like USDC or USDT, who are both backed by fiat, who are both backed by US Treasury bonds and yields, and you take that token and you put it inside Bitcoin to buy Bitcoin, for example, which means therefore that Bitcoin is backed by USDT because it's a pair of USDT. USDT's backings is essentially US dollars, actual US dollars and US bonds, US yielding products, and so on and so on. So the ideology that people have essentially that might be inside the crypto space, that are also outside the crypto space, that crypto has no value, that crypto is, if you believe it has value for this token, then this token has value. No, I don't know who's feeding people information that crypto only has value if you believe in it, because that is absolutely ludicrous to be thinking like that. Genuinely saying, look into what you want to say first before you say it out loud, because it could make you look, not intelligent enough. Because you take a stable coin, USDT or USDC, that is backed by fiat, that is backed by US dollars, that is backed by US bonds, that is backed by US treasuries. You take that token, it's a pair of essentially Bitcoin or a pair of XRP, it's a pair to essentially many tokens, and you take that stablecoin and you put it, for example, inside of Bitcoin. That means Bitcoin is backed by USDT, that's spinning inside of it. USDT is backed by US dollars, essentially, and US treasury bonds. So the ideology that crypto is only valued at what you think is valued at, or what people believe is a value at, is ludicrous. So just want to put that out there for anybody that is confused that crypto is what you believe it's going to be, if it's just some sort of thought bubble. This is just to help you out. This is not to bash into in any sort of a way, TAN UKI, just so you can have a better understanding. But don't follow the sheep when they say crypto has whatever you believe it's going to be the value of. Don't believe the sheep. Always study before you say something, because it could make you look uneducated. Hi everyone, Lemon, good to see you as well. How you doing? True as let's go through. Even Miles and CMF, sorry I'm late, no problem. Joe, good to see how you doing. Hi Miles and CMF, Stormy, good to see you as well. How you doing? How you been? Why every single crypto bro that I watch have a fake home? Well, I like the background that I have, and I've told many people before that it is AI. I mean, it's not AI, sorry, it is a green screen, and it says Restream here as well. But I like the background. What's wrong with the background? Hi all. Why markets still dipping? Two scenarios why the markets are dipping. One, essentially, is that the tariff situations that are coming up April 2nd. Second, it's US versus Iran. That's causing the market to be volatile as well. Good morning, Miles and CMF. Ghost Runner, good to see you. How you doing? How you been? Facts, Miles. Let's go, Ian. Hi, is there anything else we should be looking out for that may affect the market downturn besides tariffs and wars? Is there anything else you should be looking in that we should be aware of beside tariffs and essentially wars? Yes, but hypothetical essentially scenarios. So scenarios that might never happen. For example, um, the outcome of a major country, for example, banning crypto assets, could cause volatility inside the market space. But the scenario of that happening is slim to none, because the US obviously being the biggest market space in the world, and the way they're essentially promoting crypto assets, want to become the capital of crypto assets. So I don't think any country is planning on banning crypto assets. But if something like that happened, then it could cause volatility inside the market space as well. But other than scenarios that might never happen, the only two scenarios that could happen is just tariffs and wars right now. Just tariffs and wars and policies. Brought more, but good question, Shelly, because people should be aware of if there are any other scenarios out there. Brought more XRP today. Is not going to be at this price much longer. People will be priced out soon. Remember when we could buy XRP at 48 cents, 50 cents, which is very, very true. Absolutely facts. Hi, Miles and CMF family. Alex, good to see you. How you doing? How you been? Crypto is the future. Facts, JP. Dr. Doom. I don't know who that is. If war happens, which is likely, will it be nuclear? No. So, based on essentially Shelley's question and essentially Johnny Bravo's question regarding the war scenarios, the chances of a nuclear war happening is zero, because Iran doesn't have nuclear power. Iran doesn't have nuclear, essentially, weaponry. Iran, at best, has missiles. So the chances of a nuclear war happening is zero. The chances of the US using nuclear power on Iran is also zero. That's never going to happen either. But the scenario of Iran and US going into war is on the verge of happening. And I'll tell you why. So US Army ships are pretty much borderline to Iran right now. So there are US Army ships on the south of Iran, just chilling there, for example, waiting for the green light to go in. There are actual US Army ships. And also, I have a friend in the US military, and he's a translator. So this person is a translator for the US military. He told me that, because I asked him the question of, is essentially, because everything that's happening in Iran, there's two reasons why it's happening. One is nobody wants Iran to have nuclear power, which is very understandable. The Iranian government should not be in holding any sort of power authority. The Iranian government are criminals, and they really are. And people will find out if later on that they really are. But the second thing is, they want to remove the Iranian government. So the US's essentially war situation isn't with the Iranian people, it's with the Iranian government. That's where the issue is. And they want to replace the Iranian government with the Shah. The reason why I'm saying this is because the American friend that I have, who is inside the US military, who is also a translator for the US military, he's had a conversation, a very brief conversation with him, and he let me know that the US military is looking around for translators that are Persian translators, that understand how to speak Persian and so on. And they're essentially sending out emails and letters to essentially any translators out there that work for the US military that can understand and speak and write Persian, which means that the US is preparing to enter in. And he said, obviously, they do background checks on the US military, essentially people that are translators, that they don't have any ties with the Iranian government and so on before obviously they do get hired as translators. But anyways, he let me know that the US is actively looking around for essentially Iranian translators that are within the US military to see, who they're going to take with them. And Trump isn't backing down, neither is Iran, and the US is getting prepared to enter. And they want to replace the Iranian government with the Shah, which is the royal family of Iran. as I said, there's two reasons. One is because they want to replace the Iranian government. Two, because replacing them would essentially remove the idea of Iran getting any closer to a nuclear power, which they shouldn't do. As I said previously, I'm Persian myself. I'm Iranian myself. I'm Persian. And I stand with the US. I stand with the US. I stand with the royal family of essentially Iran, the royal family of Iran, the Shah, the king of Iran. And I'm standing with the US on this one. 100%. Actually, there is the population of Iran, about 80 to 90% of Iran, genuinely, about 80 to 90% of Iranian people in Iran are standing with the US. The only Iranians that are standing with the Iranian government is the Iranian government. 80 to 90% of Iranian people in Iran are standing with the US. That's how much everybody wants the Iranian government to be removed. But now, President Trump, but that's the truth, that, you know, CNN or anybody else wouldn't tell you. President Trump is what we're going to talk about next for the crypto space. Pardons essentially Arthur Hayes and two other BitMEX co-founders. So Trump is still trying to show that essentially crypto space, pro-positivity towards the crypto space. And today's announcements regarding the crypto space was Trump pardoning two co-founders essentially of BitMEX exchange, crypto exchange, and another one as well. So Trump also pardoned Arthur Hayes, co-founder, BitMEX Samuel Reed, and Benjamin today. CNBC first reported the pardons, which the White House said was signed on essentially Thursday. In 2020, the US, essentially Department of Justice, DOJ, brought charges against BitMEX. It's essentially three co-founders and his first employee, Gregory, accusing them of violating the Bank Secrecy Act. Prosecutor alleges BitMEX essentially advertised itself as a place where customers could use this platform virtually, anonymously, without providing essentially any sort of KYC information. Now, we've got to understand, regarding BitMEX, it was a long time ago when KYC didn't even exist. All four individuals eventually pleaded guilty and were sentenced to fines and essentially sentencings. And this exchange itself pleaded guilty to, you know, violating the BSA essential rules and regulations last year. Arthur Hayes faced 2 years of probation. Dello spent 30 months on probation, and Reed 18 months of probation. They got 12 months of probation. Pretty much a lot of people were arrested from this exchange, BitMEX. In a statement, Dello said that he and his colleagues had been wrongfully targeted. This full and unconditional pardon by President Trump is essentially a victory of the position we have always held in, that BitMEX, my co-founders, and I say that I've never been charged with a criminal offense through the obscure accredited laws. During the Gary Gensler situation, BitMEX was heavily hit as well. I'm sincerely grateful to the president for granting this pardon to me and my co-founders. The Commodities Futures and Trading Commission essentially ordered BitMEX to pay $100 million for violating essentially the CFTC acts in terms of regulations back in 2021. Attorneys representing Arthur Hayes, Dello, and Reed did not immediately return any sort of essentially request for commenting. The reported pardons come just days after Trump granted a pardon to Trevor Milton, the former CEO of Nilco Motors, who was previously convicted of fraud as well back in 2022. And in January, Trump made a good and long-standing promise to pardon Silk Road creators and so on. Trump has just today essentially pardoned 4 people that were wrongfully accused with the BitMEX essentially exchange, the BitMEX co-founders and first employee and so on, of conspiracy of frauds and so on that they were essentially facing back then. Until now, they were still on probation. And they had to pay $100 million. $100 million that they pay out of their own pockets. Trump has now pardoned them today, saying that essentially they did nothing wrong and they were just trying to bring in innovation inside the United States, and they were penalized for bringing innovation inside the United States for the crypto space. Oh, no. I can't see the comments. There we go. Now I can see the comments. For a second, Restream kicked me out. I have no idea why, but now I can see the comments again. I couldn't see the comments for a second, but now I can see them. I think I can see them. Drop a thumbs up inside the comment section just so I can know it's active. CMF members, drop a thumbs up inside the comment section just so I can know it's active, the comment section. Because it kicked me out of the comment section and now I've logged back in, just in case it's not. While everybody's dropping a thumbs up inside the comment section, I just want to see if it's active or not. If I can see people's new comments, because it logged me out and now it's logged me back in. While everybody's doing that, let me go inside the comment section as well, because there are some questions that need to be answered. And obviously, the next news we're going to be covering on tonight's live is regarding South Carolina as well. So we're going to be talking about South Carolina. We talked about North Carolina, how they're essentially trying to go for a Bitcoin reserve or a digital stockpile. Now we're going to be talking about South Carolina as well on tonight's live. But before we talk about South Carolina, let's go inside the comment section first, and then we go straight into that news. So it's crazy in here tonight. Yes, greetings, Miles and family. Happy Friday. Let's go, Ray. How you doing? Happy Friday, brother. All facts, as usual, regarding Iran, brother. Let's go, Ray. Happy Pisces says. Yeah, my comment section is not working. Crap. Yeah, the comment section is not working. My apologies if you or someone in your family mentioned this before, but recently Canada just allowed Coinbase to sell at USDC, which could take over 30,000 limit Canadian crypto or 22,000 American annually. You can't buy crypto, but you can buy USDC and swap it into Canada. Confidence is, or Wales moving to the US. I think it's Wales moving to the US, to be fairly honest. But let me fix the comment section because it's not working. Okay. Now everybody drop a thumbs up inside the comment section. Let me see if it works. Can you read it off your laptop? Yeah, now I can. Thank you, Shelly. I can see Shelly's comment. It says, can you read it off your laptop? I can read it now. I have to refresh it again. Can you see us on YouTube? Yes, I can. Yes. I just read JP's comment as well. Okay, the comments are back, but any previous comments we've had, they've all disappeared. I can only see the new comments that everybody's going to be typing out now. So if you did previously ask a question, I can't see anybody else. Now, if you did previously ask a question, all previous comments have disappeared. I can only see the new comments now. I can see Ghost Bonus put a thumbs up, Shelly's put a thumbs up, JP's put a thumbs up, Mike's put a thumbs up, Ian's put a thumbs up, Joe's put a thumbs up. Yeah, I can see everybody's comments now. But any previous comments, they've all disappeared. I can see the new comments now. So we're back to normal. South Carolina. Thank you, CMF, for that. South Carolina. South Carolina proposes a state-backed Bitcoin reserve to hedge inflation. So we've talked about North Carolina, how they're essentially getting involved inside the Bitcoin space or the digital stockpile reserve type of scenario. And now South Carolina is thinking about doing the exact same thing. So here it is. South Carolina has introduced new legislations aimed at creating a state-controlled Bitcoin reserve. The bill titled the Strict Digital Asset Reserve Act was filed essentially on March 27th and seeks to authorize the state treasurers to hold and manage digital assets, including Bitcoin. Under the bill, the total essentially Bitcoin holders cannot exceed 1 million BTC. Also, Act essentially limits digital assets to 10% of the state's total funds under management, and the move follows concerns about inflation affecting the value of their state-controlled, that's essentially holding digital assets, may help reduce during economic downturns. If passed, the state treasurer would be permitted to allocate unused, essentially, or uncommitted state funds, including those from the General Fund and Budget Stabilization Reserve Fund, towards digital assets and reserve assets that are being stored using cold wallets or certified custodians to meet strict security standards. The legislation includes measures for public accountability. The state treasurer essentially would be required to publish the public addresses of all the assets and the digital assets they're going to be purchasing. This step would allow residents to track and verify transactions directly on the blockchain. In addition to state management essentially funds, the proposal allows South Carolina residents to voluntarily donate digital assets to the reserve as they want to, and this could further expand the state's holdings and increase local engagements in digital finance. The same day brought positive news when South Carolina dismissed its lawsuits against Coinbase Staking Services, as Coinbase's chief legal officer confirmed. The dropping essentially of legal actions suggests that South Carolina may be adopting a broader crypto regulatory policies in the future, and in South Carolina lost $2 million of staking rewards due to the lawsuit. The bill reflects a broader shift in South Carolina's approach to digital assets. As the state steps back essentially from restrictive legal actions, it is now exploring ways to regulate essentially and integrate inside the crypto space into its financial planning. So North Carolina inside the crypto space, South Carolina inside the crypto space, they're both going for a digital stockpile. More American states are now filing out for a digital stockpile rather than just a Bitcoin reserve. So the tables are turning. Before, it was all about Bitcoin this and Bitcoin that. Now we're moving into a stage where American states are actually filing in for a digital stockpile rather than just a Bitcoin reserve, which is great to see. You should never put all your eggs in one basket. It makes always a lot more sense for this to be happening regarding a digital stockpile than a Bitcoin reserve. But now, moving off essentially South Carolina's new movements inside the market space to Trump, White House, and El Salvador. Trump plans a White House visit for El Salvador pro-Bitcoin, essentially president. President Donald Trump is set to host El Salvador's president, Bukele, essentially, at the White House in April. The visit, reported by Bloomberg, follows essentially the president of El Salvador's agreement to detain hundreds of alleged Venezuelan, essentially gang members deported from the US, a move that aligns with Trump's immigration enforcement agendas. If finalized, the president of El Salvador will be the first leader from the Western Hemisphere to receive a formal White House visit under Trump's administration. While no official date has been set, discussions are ongoing and plans could change. So with El Salvador's president meeting Donald Trump in April, it's not just going to be about the prisoner swaps that they're doing, but they're also going to be talking about the crypto space, because El Salvador is extremely very big inside the crypto space, and America wants to become the capital of cryptocurrencies. The president of El Salvador essentially has actively courted Trump in his recent months, positioning him as a key regional ally on security and migration. The president of El Salvador has drawn international attention for his strict crime policies, also particularly his crackdowns on gang violence, which has significantly reduced crime in El Salvador's rates, and his administration cooperation with the US deportation policies could further solidify this he's standing with Trump, who has essentially made the border much more top priority over security. Beyond security and migration, the president of El Salvador has made headlines for El Salvador's bold embrace of Bitcoin and crypto assets, starting back in 2021. His government has made Bitcoin legal tender, positioning the country as a global experiment for cryptocurrencies adoptions, and this move has drawn mixed reactions, with supporters praising it as financial innovation and critics pointing to volatility and the IMF concerns. The International Monetary Fund told El Salvador that they cannot essentially be this pro inside the crypto space if they want to borrow money from the IMF, but it seems like El Salvador couldn't care that much about it because they're still buying Bitcoins for their essentially country's portfolio, but they're getting some sort of helping in hand from the International Monetary Fund. So they toned it down a bit, but not completely. The president of El Salvador has also remained a strong advocate for Bitcoin, using it to attract foreign investments and promote economic independence. It is unclear whether Bitcoin will be a topic of discussions during his visit, but his meeting with Trump could signal potential shifts in the US, El Salvador's financial relations. So, El Salvador's president coming to essentially meet Trump. They're going to be talking about the immigration situation inside the United States, obviously, but they're also going to be talking about cryptocurrencies and how both of these countries can work together to bring more positivity towards the crypto space. Now, moving off essentially El Salvador and the White House and Trump, but still sticking to Trump. Canada. I said to everybody, the longer Canada keeps up this charade of Canada is strong, Canada is going to last long inside of this tariff battle against the US and against Trump, I said it's a losing battle for, if anybody remembers, my exact words were, it's a losing battle for any country to go up against the United States in terms of a tariff battle. It's just a losing battle to even start out with, because the US will win that battle in terms of tariffs the longest. It could go on for decades, tariffing countries, and it would still survive. Then I said, even at the end result, if the US's economy gets into a bad turbulent situation and it goes down, the entire world goes down with it, which means everybody will lose in that battle. And we've got an update from Canada. And remember, Canada said if Trump wants to tariff us, then we will tariff them back. We will stand strong against the US. And they gave it this big, bold speech to the world. CNN was lapping it up and saying, look at, Canada telling Trump, to sit back in his place. CNN was jumping up and down, clapping for themselves, popping champagne bottles. Well, it turns out Canada economy not doing too well. Even though Canada made these bold statements of we can stand against Trump, we're this powerful and that powerful and so on. Canada's economy growth has slowed down significantly. Last month and this month is not looking great either. And it's just been a month, just 1 month of tariffs. Canada is already feeling the heat, raising fresh concerns about the impact of Trump's tariffs, because Trump's tariffs are going to get a lot more worse for a lot of countries starting April 2nd if they don't cave in to Trump's demands or the US's demands. Trump said today that the new prime minister, essentially, of Canada, and he has spoken to the new prime minister of Canada and planned a meeting to negotiate a new economic and security relationship after Canada's upcoming new election. Statistics Canada revealed on Friday today that the GDP did not grow in February. Canada's GDP did not grow in February at all. This flat performance followed essentially a 0.4% they had in January of a growth, to February having zero growth, March pretty much having zero growth. This month they're having not much of a good time either. And if Canada continues this path of trying to go up against Trump, Canada's going to be in big trouble in terms of this tariff battle. Several analysts have came out and said that if there was no growth in March either, the unrealized rate for the first quarter would stand at 2.1%. That figure is a little above Bank of Canada's earlier forecast of 2%, and also higher than their 1% growth economists predicted in the essentially recent survey that was done. With this outcome, it would surpass those forecasts. It would still be weaker than the 2.6% essentially pace recorded in the fourth quarter. And the Bank of Canada is scheduled to make its next policy decision on April 16th. On one hand, weaker growth generally exerts downward pressure on inflation. So Canada is going to be experiencing very high inflation the longer it carries on this battle of Trump, which could justify rate easings at some point. On the other hand, higher tariff raises import costs could also push consumer prices upwards. Governor Tiff noted last week that the risk of a trade war could create inflation pressures, limiting the central bank's room to lower interest rates. And he said that the bank must ensure that Canadians believe price pressures will stabilize the long run despite sudden price hikes that are caused by tariffs. Uncertainty around tariffs had a powerful effect earlier this year. In January, many exporters and importers stepped up their activities to get ahead of the steep duties that Washington was threatening to impose. That surge helped boost January's month GDP figure, but by February, the effect of those efforts seemed to have faded. According to Statistics Canada, the manufacturing and finance sectors still had some gains that month. Yet, essentially, real estate, oil, and gas extractions and retail, essentially, trade suffered declines. The agency added that the primary, essentially, retail data for February suggests consumers tightening their spendings for the second month in a row, pointing to reduced households. Trump and essentially Canada have planned a meeting after Canada's election day. The Prime Minister, essentially Mark Carney, who took office on March 14th for Canada, spoke with President Trump by the phone last week. On his social media platform, Trump wrote on Friday, "It was an extremely productive call. We agree on many things and will be meeting immediately after essentially Canada's upcoming election to work on elements of politics, business, and all other factors that will end up being great for both the United States and America, essentially, and Canada." Carney also released a statement about the conversations, confirming that he had President Trump will begin a comprehensive negotiations once the elections are over. And at the same time, Canada retreated that Canada will continue imposing counter tariffs, especially once the US applies its round of tariffs and imports on April 2nd. Trump has billed that the date Liberation Day, which is April 2nd, and plans to unveil broad, essentially tariffs on every country around the world, pretty much. Canada's national election is scheduled for April 28th, and Canada is in a tight race against Conservative leader Pierre. The federal essential election has turned the American pressure much more higher heat. Canada's Liberal Party enjoys a narrow lead in some polls, but it remains a close contest. Canada's government is critical for essentially of the latest US moves, including 25% tariffs on automobiles and auto parts coming out of Canada into the United States. Trump announced that new auto tariffs would go into effect next week, calling them a major part of his plan, essentially, to protect US jobs. Canada fired back, saying measures is a direct attack on Canada's auto workers and violates essentially the USMCA trade accord that was negotiated during Trump's earlier terms. Furthermore, Trump's suggestion that Canada could become the 31st state of the United States has only increased political, essentially, tensions. Canada has already placed retaliation tariffs of 25%, about 60 billion Canadian dollars, which is around 41.9 billion actual US dollars, in goods from the US. It also threatens to impose duties on another 95 billion Canadian dollars if the White House does not essentially step back. Conservative leaders Pierre has adopted a Canada First slogan, accusing the Liberals of leaving the country vulnerable to the US's aggression by not focusing on making essentially the economy more independent. And Canada also counters the United States is no longer a reliable partner, and he believes Canada needs a new approach to relations with its neighbors. He said that the old relationships we had with the United States, based on deepening integration of our economies and tight security and military cooperation, is over. So, Canada has two prime ministers that are going up for who's going to become prime minister, essentially. One of them being a liberal prime minister for Canada, and that man is extremely weak. The other prime minister for Canada, Pierre, he is standing firm, he's standing strong, and so on. But what both of those morons need to understand, both of those people who are trying to become the leader of Canada, they need to understand that Canada is not going to last too strongly, essentially, against Trump's tariffs, because already 1 month in, just 1 month in, Canada is showing weak signs already in terms of the tariffs. The tariffs have weakened Canada's economy a lot, where Canada has had zero growth as a country just in the first month of tariffs. So in other words, the longer Canada keeps up this situation of tariffs, the worse it's going to get. And at this point, we have to see which country is going to first learn their lesson. Is it going to be Mexico that learns their lesson first, where their economy starts crashing because they think they can tariff the US back? Or is it going to be Canada that learns their lesson and the world learns from Canada that you shouldn't be tariffing essentially the United States back, where the United States has been feeding you all these years billions of US dollars to keep your country afloat? Or is it going to be China that feels the economic pressures of the tariffs and the world will learn that you shouldn't tariff the US back? As I said yesterday, the US has helped many countries. Sure, it has also funded some dodgy behaviors, but they have funded many countries in a positive way. They fed the EU, the UK, Canada, Australia, many countries, millions, billions of dollars. And those countries have been tariffing the US for the longest time, while the US was feeding them millions and billions to keep their countries afloat. They were tariffing the US all these years. Tables are turned. These countries don't like that the US is tariffing them back, and they're trying to say Trump is bullying them. And now they want to tariff the US back to show the entire world that they are strong, independent countries and they can stand up against the US. And in reality, they're all weak and pathetic and embarrassing. And they should stop trying to tariff the US back. Because if they tariff the US back, they go into economic pressure. If every country tariffs the US, let's just assume the long scenario. Let's just say every country on this planet decides to tariff the US back and put economic pressure on the US. Never going to happen, but let's just say it happens. What happens then? The US goes down. What happens after that? The entire world goes down. The International Monetary Fund put it, as I said very previously, If the US markets sneeze, the world market catches a cold. This tariff situation just doesn't make any sense of why each country just wants to stand up and tariff the US back when they know it's a losing battle walking into tariffs, either for their own country or for the entire world. Central banks is what we're going to talk about next. Moving off essentially Canada's dumb behavior. Not just Canada, Mexico also, China also. But we're going to talk about central bank in terms of the UAE, the United Arab Emirates. But before we talk about the central bank of the UAE, and we're going to be talking about the UK, we're going to talk about the UAE, the US, and a lot of European countries to cover on tonight's live as well. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. We're more than happy to answer the questions you may have. So let's go inside the comment section first. We'll answer some questions, and then we'll go straight into the UAE news. And as I said previously, I read everybody's essential question one by one, or if you have a statement, I'm more than willing to read it as well. Let's see where we're at. All good, Miles. Let's go in. X is acting strange today. 2 with the link. Yeah. Thank you for letting me know about that, Shelly. X is acting strange tonight long. Yeah. I hope you're doing well, Miles. I'm doing great, Zach. Good to see you as well. How you doing? How you've been? Even Miles, Holla CMF. Let's go. No, let's go nowhere to go but from up. Oh, there's nowhere to go now except going up. Exactly. Facts. Best way to think about it, Peg. I always forget to put the @ in front of them. Okay. Central Bank. Central Bank of UAE to roll out digital dirhams in 2025. Now, I've said this previously. A lot of countries are rolling out CBDCs this year. Now, you might have heard the news that, Trump has banned CBDCs inside the United States, but obviously that still needs a green light from, Congress, in other words. And senators have not given that any sort of green light maneuvers. But the rest of the world, about 98% of the world is still in CBDCs, and they're releasing them this year. Not every country, but a lot of countries. Russia being essentially one of them that wants to introduce their CBDCs this year. Brazil obviously introducing their CBDCs this year. And a few other Middle Eastern countries and a few Asian countries are releasing their CBDCs this year also. And the UAE being one of them. So here it is. The United Arab Emirates is set to launch its digital dirham, a central bank digital currency CBDC for retail purposes by late 2025. By late this year, so Q3 to Q4, we should be seeing CBDCs rolling out of the United Arab Emirates. The United Arab Emirates, as per the reports from the Khaleji Times, the central bank of the UAE will launch the digital dirhams in the fourth quarter of 2025. The move adds that the United Emirates to the growing number of countries investigating central bank-backed digital currencies. The digital currency will be adopted in addition to cash and made available through fintech companies, exchange houses, and banks. It will accommodate essentially multiple party payments and instant settlements using high security tokenization and smart contracts. The CBUAE has also built an integrated digital dirham platform and wallet which will enable transactions at a retail, wholesale, and cross-border levels. This follows a recent rebranding of the digital dirhams, with its first letter now serving as an international symbol. So the UAE is getting ready for CBDC, not just domestic payments, but international payments. They're getting ready as well. They're releasing the CBDCs this year. The UAE's first move towards digital currency back in June 2024, when it introduced regulations for dirham-backed stablecoins, allowing private firms like Tether, for example, to introduce stablecoins back in June 2024. However, digital dirhams is different to a stablecoin like USDT. It is fully backed by the government, ensuring stronger security, oversight, and monetary control compared to privately issued stablecoins like USDT or USDC. The UAE has developed digital dirham wallet and platform to go with the new currency, which will make it easier to make payments both domestically and internationally. As a part of its rebranding efforts, the digital essentially currency symbol has been updated, and the UAE is also taking part in the global CBDC initiatives, such as the ABOR project, which is a joint venture with the Saudi Arabia to test digital currencies based cross-border payments. And currently, the UAE is testing and developing its digital dirhams, joining countries like China, Russia, Sweden, Korea, Brazil, and the United Kingdom, which are also piloting their own CBDCs. The European Central Bank is also similarly running a multi-year trial for a digital euro. The digital euro CBDC is also coming out this year on the same pathline of Russia's digital rubles and Brazil's digital drex and the UAE's digital dirhams. And a few other countries as well, as is noted here, essentially Sweden, Korea, Brazil, Russia, the list just goes on. But a lot of people have assumed for the longest time that CBDCs essentially is, some people still know it's obviously not going away, but some people assumed just because there was one essentially inside the United States where they mentioned that CBDCs will be banned, that CBDCs will be going away forever. Unfortunately, that is not what's going to be happening. 98% of the world in terms of centralized banks are still inside of CBDCs. They're still testing on CBDCs and they're getting ready to introduce CBDCs to their own jurisdictions. And there is a list of countries that are going to be releasing CBDCs this year and next year. Now, moving off CBDC news to the SEC. The SEC ends another crypto case. Yesterday, the SEC ended 3 crypto cases back to back. And today, the SEC has essentially ended another crypto case. And that crypto case being Crypto.com. Crypto.com's investigation aimed the shift in US crypto regulations. Crypto.com confirmed today that the US SEC has ended its investigations into the crypto exchange. The company stated essentially no enforcement actions will be taken, bringing essentially a years-long probe to a close. The SEC has not yet issued a formal essentially comment, and the financial services company filed a legal case following essential receipts of Wells' notice, which hinted at potential legal action. Crypto.com essentially questioned which authority the SEC had to treat most cryptocurrencies as securities. Before the Trump administration initiated regulatory transforming changes, the lawsuit Crypto.com had filed against the SEC was discontinued in December. Since essentially the start of the new administration, the SEC has adopted a different approach to regulating digital assets. Multiple investigations and lawsuits involving major crypto firms like, for example, Kraken, Coinbase, Ripple, Crypto.com, and a few other ones have all been dropped like a domino effect back to back by the SEC. The SEC's shift includes essentially ending cases against several platforms and NFT companies as well, such as essentially Gemini, OpenSea, Yoga Labs, and a few other ones. Ongoing litigations involving firms like Tron and Binance has been paused. The agency has also retracted prior essential crypto-related guidance. Nick, the chief legal officer at Crypto.com, criticized the SEC's earlier actions, stating essentially that the company had to defend itself against regulatory overreach. He expressed relief that the matter concluded without charges after a lengthy process. Paul Atkins, nominated to lead the SEC, addressed lawmakers this week. He emphasized that developing a clear, essentially digital asset framework is a priority for the SEC. His appointee follows the departure of former SEC Gary Gensler, under essentially whom crypto enforcement increased. Crypto.com, which serves over 140 million users globally, announced also that a primarily partnership with Trump Media and Technology Group, the collaboration aims to launch exchange-traded products under the TriFi brand. Despite the broader regulatory shifts, some firms remain under scrutiny. Unicoin, for example, which received a Wells notice last year, confirmed it is still in review process and has not received an updated feedback from the SEC. The good news is obviously all the major cases with the SEC have been fully dropped, you can see at this point. The major cases were essentially Ripple case, which is coming to an end, the Coinbase case, which is already ended, the Crypto.com case, which is already ended, Kraken's case, which is already ended, and a few other big ones. And this is all because of Trump. Everything positive that's happening inside the crypto space is because of Trump. The case is getting dropped because of Trump. All these departments are pro-crypto because of Trump. Now, on the topic of Trump, senators, Democratic senators, Some of them have came out against Trump regarding the crypto space. Before we go through that news, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it outside the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first before I review you the next news, which is regarding senators, regarding Trump and crypto. Let's see where we were at. We were at here. Peg says, do you think on April 2nd, Liberation Day, the tariffs will be delayed and or disconnected? It does make a huge impact on the crypto market. Just curious what your thoughts are. It does. That's true. If the tariffs are delayed, then it's going to be a positive reaction inside the crypto space. If the tariffs do drop, it's going to have a negative impact on the crypto space. And it's going to be a complicated situation because the whales or the exchanges might manipulate it in a way that it will look like a positive scenario April 2nd, because we've had different perspectives coming out of essentially, for example, Bloomberg. So Bloomberg actually talked about regarding Liberation Day, which is 2nd of April, regarding the crypto space and the stock market. And they said that the 2nd of April could also be a positive event for the crypto space, where traditional finance is seeing under the burden of, essentially tariffs, and that an alternative assets like crypto assets could be seen as a positive. So there has been perspectives that have come out from Wall Street, from Bloomberg, that do suggest that Liberation Day, 2nd of April, tariff day for the rest of the world, could also be a positive thing for the crypto space. But there's also the other perspective that the crypto space follows Bitcoin. Bitcoin follows the stock market. And if the stock market goes down on April 2nd or near April 2nd, then Bitcoin obviously follows the Nasdaq's footsteps. And Bitcoin doesn't react like a digital gold or a safe haven or risk-off asset. If it did, it will be reacting like gold. Gold is actually doing pretty well for itself right now. But unfortunately, Bitcoin follows the Nasdaq, which means Liberation Day comes around, the Nasdaq becomes volatile, Bitcoin becomes volatile, and the rest of the crypto space becomes volatile. And unfortunately, because we don't have regulations, certain crypto assets haven't decoupled themselves from Bitcoin because we don't have regulations yet. But obviously, regulations are working in the background. They're coming in slowly, or very fast. But in general, do I think Liberation Day in terms of tariffs will be delayed? It's a possibility that, there could be a delay scenario when it comes to tariffs on April 2nd. Or that some countries don't get tariffed at all on April 2nd. For example, the United Kingdom might not get tariffed at all on April 2nd. The EU, some countries in the EU have already started waving the white flag towards the United States. They don't want to get tariffed on April 2nd either. So there is a lot of countries actually that are waving the white flag, and they don't want to get tariffed by Trump. They're actually having phone conversations with Trump. They want to have sit-downs with Trump and so on because they don't want to get tariffed. So there's a lot of scenarios on the table for Liberation Day on April 2nd regarding tariffs. Some countries are waving the white flag. That's a positive for the crypto space. Some countries are not backing down and they want to go head-to-head with Trump, which is a losing battle for them. And then there's the other argument, essentially by Wall Street and Bloomberg, where it suggests that it could be a positive thing regarding Liberation Day for the crypto space. But then there's the other argument that the Bitcoin essentially follows the Nasdaq. If the Nasdaq goes down, Bitcoin goes down, so does the rest of the crypto space with it. But all we got to understand is that it's short-term volatility. Tariffs are short-term volatility. Behind the scenes is the rules and regulations that's happening. Behind the scenes is essentially FDIC, pro-crypto now, telling banks they can work with crypto assets. The OCC telling banks they can work with crypto assets. The SEC and CFTC come together a decade for rules and regulations. The SEC dropping cases back-to-back every day like a domino effect. Positivity towards the crypto space. And they're all getting ready for essentially the banking institutional sector to enter the crypto space, which is, the next clientele that's going to enter the crypto space. We've been preparing essentially for months for the next clientele to enter the crypto space, and they're just about to enter the crypto space. And while they're trying to enter the crypto space and while the regulations are coming, we have this tariff situation, which, again, tariffs need to happen. I said this, beforehand, that I support Trump on his tariff movements. It needs to happen. It genuinely needs to happen. Because it's the only way that the US is going to get control back. And the world needs to be set on the right path, let's just say. in the simplest way. The world was headed towards the wrong path. Genuinely, the world was headed towards the wrong path. Trump, if you like him, love him, respect him, don't respect him, fear him, don't fear him, whatever it may be, Trump is that man to put the world back on the right path by using tariffs as a controlling mechanism also. Not just also because it's beneficial for the United States, because manufacturing is going back to the United States, which is creating more jobs for the United States citizens. Not because of that, because there was many scenarios regarding tariffs. But tariffs are also a good way to control certain countries to do good things. So the world was headed towards the wrong path for the longest time. And there has always been one man in history. If you look at any history book, there's always been one man, just one man, that changed the course of history. Trump is that man. That's why I say, hate Trump, love Trump, like Trump, don't like Trump, fear Trump, don't fear Trump, respect Trump, don't respect Trump, whatever you may stand on. That man is putting the world back on the right path. And tariffs are a controlling mechanism. They're also a mechanism to bring manufacturing back to the US, and it's working. A lot of manufacturers are coming back to the US. Rolls-Royce is opening up a factory in the US because they don't want to get tariffed by the US. Hyundai, Toyota, Lexus, and the list goes on. SoftBank is investing, a Japanese company, SoftBank, is investing $100 billion in the US because of Trump. And there's so many investments happening inside the United States. So tariffs need to happen. There's a good mechanism of control. But also they can be delayed, they can be essentially, and the white flag scenarios. There's so many scenarios on the table for April 2nd. But the outcomes being April 2nd could play out positive according to essentially Wall Street and Bloomberg perspective, but it could also play out negative. But also a lot of countries are waving the white flag already. Shelley says, about time we have a pro-crypto SEC. Facts. I agree 100%. Shelley also says, I read the SEC officially announcing the end of the Ripple case until August. Is this true? If so, why? Until August? No, that's not true in any sort of way. It's just people making up things, essentially, online, Shelley. Everyone's putting different deadlines around. And people said, for example, people said, Shelley, if we go back a little bit inside the crypto space, there were people coming out a while ago saying the Ripple case is going to end in 2026. If anybody remembers, there were those people coming out saying it's going to take 2 years for the SEC and Ripple to settle. And this was during Trump's presidency. So Trump becomes president, the SEC is dropping cases, but the Ripple case is not being lifted yet because it's creating too much confusion. And there were people coming out and saying, the Ripple versus SEC case, a few months back, to be even more precise, about a month back, people were saying the Ripple case is going to be ending in 2 years' time. And I said, no, it's not. It's going to be first quarter or second quarter. So everybody always gives out deadlines of what they assume. And some people ask ChatGPT for deadlines, which people have to understand. I'm not saying you did this in any sort of way, Shelley, but people use ChatGPT to make up random deadlines and they post it on X and it goes viral and people think it may be true, but it's not true in any sort of a way. So it's good that Shelley asked the question of, is this true? Because if anybody else is thinking about it, that it's going to be in August times and so on, no, it's not true. It's just an estimate somebody's throwing out there. But good question. Miles, why are institutions and companies, even states, are making their own stablecoins? Why don't they just use USDC or OLUSD? Good question, Ghost Burnham. So why are essentially institutions creating their own stablecoins? So yesterday I was asked a similar question. Why are institutions or banks, why is every bank, for example, creating their own stablecoin? Is that going to be a negative towards XRP, for example? Is it going to be a medium of payments or essentially OLUSD and so on? And my answer to that question yesterday was, and it's a similar question to what yesterday's was, but you're referring to institutions this time around, institutions creating their own stablecoins. If every bank and every institution creates a stable coin, it's just going to become a novelty item. That's all it's going to become. So if, for example, JP Morgan, Fidelity, Morgan Stanley, BlackRock, Bank of America, 21 Shares, ARK Invest, A16Z, and so on. If all these American institutions create their own stablecoin, it's just going to become a novelty item. The only people that would use their stablecoin, it's going to be their own clients, their retail section clients or their high-profile clients, and so on. But when it comes to domestic payments, so for example, if a Fidelity wants to send essentially, digital dollars to a bank based in Hong Kong, for example, they're not going to be sending their own US dollar version of Fidelity to Hong Kong, because Hong Kong is not holding essentially. The issue is Hong Kong needs to be holding US dollars, and then Fidelity needs to be holding US dollars, but it needs to be, so both of them have to understand that this has value, that has value. So the confusion is going to be too much. It's going to create a SWIFT scenario where SWIFT essentially messaging standard, but net on net value moving $7.5 trillion. So $7.5 trillion a day, and net on net value, even though it's a messaging standard. But with SWIFT, it's every bank holds US dollars, euros, pounds, and so on and so on. So that same scenario will play out if every bank or every institution is going to introduce their own stablecoin. It's just going to become a novelty item, a genuine novelty item. Domestically, their own clients would use it. Internationally, it's going to be no use case. There still needs to be a medium of payment for it to be happening. So it's a novelty item, genuinely a novelty item if every bank and institution starts creating their own stablecoin. Hi, TG AI, good to see you. How you doing? If it's going to be too many shorts on April 2nd, market maker may reverse up. True. This is why essentially Bloomberg said that there could be a reversal on April 2nd, that the markets don't react in a negative way on April 2nd, and instead the crypto market reacts in a positive way, because too many people are anticipating the market to drop on April 2nd because it's Liberation Day, Tariff Day. So the market could go the opposite way. Also, it's because exchanges could manipulate the market space, because if too many people are placing shorts, 20x shorts leverage, 50x leverage shorts, 100 essentially x leverage shorts, and so on. If so many people are putting shorts down already, waiting for April 2nd, the market could do a reversal as well, because the exchanges are not going to be paying out that many people. So there's two outcomes on the table. One of them is Bloomberg suggesting that it could be actually a positive regarding Liberation Day, April 2nd. The other outcome is that Bitcoin follows the Nasdaq's footsteps. If the Nasdaq goes down April 2nd, then so will Bitcoin and so will the rest of the crypto space, because we don't have regulations. That's the two outcomes on the table right now regarding that matter. Now, senators. 5 Democratic lawmakers in the US Senate have called upon leadership at regulatory agencies to consider the potential conflicts of interest from a stablecoin launched by World Liberty Financial. If anybody's ever heard of World Liberty Financial, it is the Trump family, essentially crypto project, more to do with Trump's son than Trump himself. But a letter that was sent out today by the US Banking Senate Committee. One of those people was Senator Elizabeth Warren. No surprise there. Senator Elizabeth Warren and 4 other Democrats have asked the Federal Reserve Committee Chair on Supervision and Regulation, Michelle Bowman, and acting essentially OCC, Rodney Hood, how they intend to regulate World Liberty Financial stablecoin USD1. World Liberty Financial is coming out with a stablecoin by the name of USD1, which I shared that news a few days back. Senator Elizabeth Warren wants to take down USD1, the essentially stablecoin that's going to be introduced by Trump's son through World Liberty Financial. So the letter came as a member of Congress are considering legislations to regulate stablecoins through the guiding and establishment, essentially, of National Innovation for US Stablecoins, or the Genius Act. The bill, if signed into law, would essentially allow the office, the OCC essentially, and Federal Reserve to oversee stablecoin regulations, including for issuers like World Liberty Financial and its USD1 coin. Trump also signed an executive order essentially in February attempting to have all federal agencies, including the OCC, regularly consult with essentially and coordinate policies and priorities, with the White House officials giving the US president unprecedented control. President Trump's involvement in this venture as he strips financial regulators of their independence and Congress simultaneously considers stablecoin legislations presents an extraordinary conflict of interest that could create an unprecedented risk to our financial systems and to the integrity of decisions made by the Fed and the OCC, said the letter, adding, the launch of a stablecoin directly tied to a sitting president who stands to benefit financially from the stablecoin success presents an unprecedented risk to our financial system. Senator Elizabeth Warren wants to take down the USD1 stablecoin that's going to be introduced by Trump's son, essentially. Let's just see how that's going to go, because the SEC, the OCC, the FDIC, and any other essentially US department right now that is pro-positive, pro-crypto, is on Trump's administration's side. I think this is going to be the first time that nobody cares what Senator Elizabeth Warren has to say. Not a single person cares what Senator Elizabeth Warren has to say at all. That's a good feeling, genuinely a good feeling, because the amount of damage that Senator Elizabeth Warren has caused for the crypto space is par on par level with the amount of damage that essentially Gary Gensler has caused for the crypto space. And then this is genuinely going to be the first time that nobody cares what she has to say, because all of those US departments, SEC, CFTC, OCC, FDIC, CFPB, are working with the Trump administration. It's nice to see a US senator having zero power or capabilities, just has a badge, says, hi, I'm Senator Elizabeth Warren. That's pretty much it. That's the amount of power she has. Now, the dark web is what we'll talk about next. There's some news that's came out from the dark web that people's information, Binance users and Gemini users' data is being sold on the dark web. But it's not from essentially Binance's side or Gemini's side. So here it is, a dark web listing by user AKM69. And no word of a lie, hackers normally have the most weirdest usernames ever. Kiki888888 claims to sell over 100,000 Gemini and Binance user records. Cybersecurity concerns mount as Gemini and Binance records reportedly containing sensitive data of over 100,000 users appear on the dark web. So people's passwords and usernames for logging into their Binance accounts or logging into their Gemini accounts are on the essentially dark web for sale. Now, the dark web has become a marketplace for sensitive user data, allegedly stolen from essentially Gemini and Binance. And these two hackers are reportedly involved in this incident. The Binance users' emails and passwords, among others, are listed in the data. Meanwhile, Binance attributes this to compromised user devices rather than direct leaks from their platforms. Now, to be fair, Binance has incredible security because they're pretty much the only exchange that's never been genuinely compromised. Binance clarified that hackers collected the data via infected computers rather than internal breach. So Binance is saying these two hackers that have got 100,000 users' data, passwords, and usernames, they didn't hack Binance to get it in any sort of way, and it wasn't essentially a leak from Binance either. It was people themselves clicking on random links or so on, and malware essentially was attached to their devices. For example, it could be their smartphone, their iPhone, or their essentially Android, or essentially their web browser. A lot of people use, for example, Chrome to essentially, regarding their crypto wallets and so on. And there are many malware essentially out there that do compromise your Chrome browsers or your Safari browsers or whatever browser you may be using till this day. But a lot of people have been compromised in that sort of way. A lot of people have been compromised with their own smartphones by clicking on the random links on a post or on a text message or click on a random email and so on. And this is what essentially Binance is claiming. It's not a breach from Binance. It's not a leak from Binance. It's people not protecting their own user details correctly and also compromising their own devices. The information on the dark web is not the result of a data leak from the exchange. Instead, it was a hacker who collected data by compromising browser sessions on infected computers using malware. Sources: the alleged sale of user information could lead to increased cybersecurity threats targeting individuals and corporations connected to these exchanges. Such instances underline vulnerabilities in user data protections amidst the rising, essentially, cyber crimes risks. Historically, Binance has refuted past claims of data breaches after conducting internal reviews. Furthermore, this incident highlights the ongoing threats inside the crypto space, pushing exchanges to reassess their data protection frameworks. Both Binance and Gemini users should exercise the caution and secure their essentially accounts against plausible threats posed by such breaches. Potential consequences may include regulatory pressure from international bodies demanding further scrutiny on crypto exchanges, data protection measures, and advocates essentially and advances in malware technology emphasizes the need for robust cybersecurity solutions to, regarding sophisticated methods so that these scenarios don't happen. So, about 100,000 users are compromised on Binance and Gemini. All their data is being sold on essentially the dark web, their passwords and their usernames. But if you are somebody that has essentially two-factor authentication, which is also what somebody has posted in the comment section, 2FASS, that's correct. If you have essentially two-factor authentication, the best one being essentially using the Google authentication, which you can download on your iPhone from the App Store or on your Google Play Store if you use an Android. Always have two-factor authentication turned on for all of your essentially exchanges, for your wallets if it's necessary, and even for essentially any other essentially thing to do with your crypto accounts. It can even be your X account. For example, X also suggests people connecting two-factor authentication to their accounts so their X accounts don't get compromised and start tweeting out random essentially Ponzi schemes like crypto meme coins and so on to people. So if you don't want to be compromised by malware that you may click on a random link or click on a random picture or click on a random message or random post or whatever, and you don't want your phone to get affected, download Google's essential authentication from the App Store or essentially from the Google Play Store, depending on what you're using, iPhone or Android, and connected to all your essentially crypto exchanges, connected to your crypto wallets, and also connected to any social platforms you may have. So even your social platforms don't get compromised either. But yeah, be careful because 100,000 users' data being sold, passwords and usernames from Binance and Gemini and the dark web, not good. Now, essentially UK officials is what we're going to talk about next. But before we talk about the UK, let's go to the comment section first, and then we'll talk essentially what's happening inside the UK in terms of the crypto space. So, moving off essentially the hacking situation from the dark web to UK news now. But before we go through that, let's go to the comment section first. Let's see where we're at. Will the UAE CBDC use XRP for transactions? The XRP ledger, yes, it should do because the UAE has talked about essentially XRP. They're part of the Bank of International Settlements. They've shown presentations with the XRP ledger printed on the presentations. So yes, yes. If Elizabeth Warren should just dig a hole. Stormy says Warren need to worry about her own corruption. How'd she get so rich while in Congress? Facts, absolute facts. What Stormy said. SS XRP baby, let's go SS. Hackers, so were engineers. They are nuts. Yeah, they are. SS, let's go. Two-factor authentication. They all have it that level. Chill, pappy. Okay, SS. Now, UK officials nervous as millions of young people invest in crypto. So the UK even though they have suggested in the past they want to become the capital of cryptocurrencies, is moving incredibly slow. But not only that, the UK apparently is nervous that people are moving towards crypto assets in terms of investments rather than the stock market. So here it is. British regulators have said that they're worried about the growing number of young people investing in cryptocurrencies, but not everyone shares this concern. Officials from the Financial Conduct Authority, the essentially the FCA inside the United Kingdom, recently faced a grilling from the Treasury Select Committee, a group of politicians who examine economic policies in greater detail. The FCA says it wants to see more Britons with large amounts of spare cash start to invest in the stock market, which should allow their savings to grow over time. According to the FCA chief executive, 38% of US essentially households directly own shares, falling to 20% in Sweden. But across Britain, he warned this figure is significantly low. One thing I also think is not great is the sheer number of under 35s for whom the financial product that they invest in first is crypto. Several million inside the UK, rather than equities or debt or other types of products. That is something that we want to engage in as well, because we know there is very high risk and you could potentially lose all your money. So the UK wants British citizens to start to learn how to invest, but also mostly invest in UK products inside the stock market to boost the UK economy. I know a better way you can also boost the UK economy. Maybe not send money to random countries. The latest FCA estimates from August 2024 suggest that about 12% of British adults, equivalent to 7 million people, now have exposure to crypto. It is worth noting that the regulator has faced a pushback on this viewpoint from some lawmakers, namely essentially John Glenn, who sits on the Treasury Select Committee. During the last government, essentially, he played a role in efforts to transform the UK into a global crypto asset hub, which ultimately fell by the wayside when Conservatives lost their year election. In a recent article for the City AM, Glenn argued that pro-crypto policies should remain a priority, especially with Donald Trump in the White House, and that the EU is offering a greater regulatory clarity through the MICA, noting that the FCA has a poor record of registering digital asset firms. It's true. The UK wants to become the capital of cryptocurrencies. The FCA has done nothing, absolutely nothing for the crypto space. They've said we're going to introduce this law and that law, and they haven't introduced jack squat. Every other country has pretty much excelled a lot more higher pace when it comes to crypto space. A lot of countries have introduced crypto regulations, they've introduced crypto ETFs, ETPs, and so many of the things to do with the blockchain space. The UK, nothing. They introduced essentially what I reviewed yesterday. They introduced the UK gilts, which is essentially, if you want to invest into UK bonds and so on, you can do it through tokenization. Not one person lined up to buy that, because the UK economy has had zero growth. And you can take a guess on why it's had a zero growth. Crypto leaders broadly feel that the FCA has adopted an aggressively cautious stance towards the industry, even creating a essentially combative environment. If the UK continues this path, it risks forfeiting its leadership in financial innovation and losing a vital opportunity to harness cryptocurrency transformatives, economic and social benefits. Glenn wrote that the FCA's mission to tackle financial crime and consumer harm shouldn't come essentially out of the determination of legitimate businesses trying to offer crypto products to consumers. Nikki essentially defended the Financial Conduct Authority's stance during the committee hearing and mentioned that the article in particular, he stressed that the regulators doesn't want to stop the UK from being an attractive place to operate a business, and claimed that 86% of crypto firms had their applications refused because they failed to meet the strict anti-money laundering standards. He added, he said, we held back approvals of some of the largest firms in the world, which did get approvals and licenses to operate in other very large jurisdictions. There are UK politicians that do want pro-crypto happening inside the United States, inside the United Kingdom. The FCA, unfortunately, has rejected, for example, Binance. They've rejected harshly towards major crypto exchanges, major crypto companies, and the UK government essentially is coming out and saying, what moron inside the FCA is back-to-back rejecting all these essentially incredible companies, blockchain companies that want to come to the UK, that want to establish themselves in the UK and bring capital to the UK, but the FCA is rejecting them one by one. The regulator also faced scrutiny regarding whether consumers understand what FCA's authorization actually entitles, and whether they might misinterpret this status as an endorsement for financial firms. All this comes as the FCA prepares to tighten the UK the crypto regulations even further. While essentially Coinbase is among those that has been given the green light to operate because it complies with the AML rules, the exchange may soon be judged against essentially what it's essentially trying to achieve inside the United Kingdom. Look, the easiest way to put this is that this is actually good to see. You know why? Because before, crypto space was just scrutinized. Every politician, every governor, senator, prime minister, president hated crypto. We're getting to a stage where government members or government bodies are criticizing their own financial departments, in this case the FCA, of why you're not getting involved in crypto, or why is this country not getting involved in crypto. So what's actually happening is government bodies are going up against each other, fighting, well, one side is for the crypto space. Who thought you'll be seeing that day come? When government people are fighting each other on greenlighting the crypto space. Because both of those departments were anti-crypto. One of them is now pro-crypto, forcing the other one to become pro-crypto. Now, Brazil is what we're going to talk about next. So moving on from the United Kingdom to Brazil. Brazil considers a digital stockpile or a Bitcoin reserve for its crucial economic growth. So here it is. Summarizing the main events, Brazil's Lula administration has identified a national Bitcoin reserve as a crucial to the country. Officials from the administration emphasized the importance of integrating Bitcoin or digital cryptocurrencies into the national financial strategy for growth and stability. The plan highlights Bitcoin's position as a potential economic stabilizer, aligning with global trends where governments consider cryptocurrencies within essentially their financial frameworks, and Bitcoin's role as a digital asset could bolster essentially Brazil's economic landscape while adopting to evolving financial technologies. Brazil's government is considering a Bitcoin reserve as a part of its economic strategy by incorporating Bitcoin into its essentially national reserves. They aim to enhance financial stability and open growth opportunities. Officials suggest that essentially a shift towards digital currencies can be instrumental in the future-proofing Brazil's economy. The Lula's administration move signals a shift in recognizing Bitcoin's potential aimed cryptocurrency rising global essentially prevalence, and the decision does align with international trends where countries explore digital assets for economic growth. And that's incorporating Bitcoin international reserve could inspire other countries, or crypto assets could inspire other associated countries to embrace digital assets. This shift might lead to regulatory adoptions and future technological integrations, potentially fostering innovation within Brazil's financial infrastructure and lowering resilience on traditional financial systems. And past instances such as El Salvador's Bitcoin adoption showcase potential outcomes similar to Brazil's approach. The application of cryptocurrencies in national finance presents opportunities and challenges alike, influencing both economic policies and global essentially financial trends. Debating rigorously essentially the creation of a sovereign reserve of a Bitcoin value is the public's interest and will be crucial to our prosperity. After all, Bitcoin essentially is a digital gold, and the gold of the internet essentially is what they're going off on. The only reason Brazil wants to create some sort of a digital stockpile is because they want to follow the US's footsteps. It's just how it is going to be, because as I said a very long time ago, whatever the US does, whatever footsteps the US does take inside the crypto space, every country is bound to take the exact same footsteps, and every country is going to be creating some sort of portfolio for themselves in that matter. Now, the next news on tonight's live is XRP news. So, Brad has predicted that XRP will be a contender to SWIFT. Ushering in a new payment system. Here it is. Ripple's CEO Brad has confidently claimed that SWIFT's payment system, the global standard for international transactions for more than 50 years, is now outdated and needs to be resolved. Brad believes that XRP's Ripple's native cryptocurrency has the potential to revolutionize the financial essentially industry by offering a more efficient, transparent, and cross-border effective alternative. According to Brad, XRP is set to take over SWIFT's role in cross-border payments, making way for a new era of global financial transactions. The SWIFT network has been the backbone of international financial transactions since 1973, connecting thousands of banks and institutions around the world. Although SWIFT has been crucial in enabling cross-border payments, it hasn't evolved enough to keep pace with the requirements of today's rapidly changing digital economy. One of the main issues is its error rate, which stands at around 6%, often caused essentially by incorrect or mismatched account details. These errors could lead to delays, reversals, and additional costs for financial institutions and their clients. Brad points out that despite its age and the numerous technological advancements in the financial sector, SWIFT has continued to operate an outdated architecture that struggles to support modern financial transactions. He argues that SWIFT's inefficiencies, especially in cross-border payments, creates friction and extra costs that Ripple aims to eliminate with its innovative solutions. Ripple's approach to cross-border payments involves combining both liquidity and messaging into a single, essentially cohesive system. Unlike SWIFT, which serves only as a messaging protocol, Ripple's XRP ledger enables real-time settlements of transactions, reducing processing time from several days to mere seconds. This is achieved by using XRP as a bridge currency, which can facilitate immediate transfers between parties in different countries without the need, essentially, for pre-funded accounts. Brad emphasizes that Ripple's technology offers substantial improvements over SWIFT, including reduced fees and the ability to provide real-time feedback during transactions. This functionality helps minimize errors and enhance reliability of cross-border payments, and that Ripple's systems also boost a significantly lower rate, with essentially estimates suggesting that it could be as low as 0.1%, a stark contrast to SWIFT's 6%. Ripple's XRP is not just a messaging standard, it also provides a unique liquidity solution. Traditionally, financial institutions have relied on large banks to supply liquidity for international transactions, often using pre-funded accounts in various markets to facilitate payments. However, this method ties up capital and limits flexibility. XRP offers a solution by acting as a bridge currency in Ripple's payment system. With XRP, institutions can transfer funds instantly between markets without needing to pre-fund accounts, and thereby unlocking capital and enhancing liquidity. Brad explains that this mechanism provides significant advantages over SWIFT, enabling financial institutions to improve efficiency and reduce cost. Ripple's influence is steadily growing, with over 100 financial institutions worldwide, including many connected to SWIFT, already adopting Ripple's outcomes and solutions. Brad is confident that Ripple's technology is set to surpass SWIFT, claiming what we're doing and executing on a day-by-day basis is taking over SWIFT. Looking forward, Brad envisions XRP as the foundation of a new, more efficient global payment infrastructure that can replace outdated systems like SWIFT. As Ripple continues to expand its network and attract more financial institutions, the company's vision of reshaping global finance seems increasingly within reach. So, according to Brad, there's no competition. Ripple is by far a clear winner. Or XRP is, XRP Ledger. And on tonight's live, we talked about essentially Ripple's movements. We talked about the UK's movements. We talked about CBDCs on tonight's live as well, and the tariff situations, the Iran and America situation. And I know that the market space is volatile right now. I just want to say this and put it out there. I know the market space is volatile, but it is something we have been talking about, that it is going to become volatile. I've been talking about the Iran and the US situation for weeks, even months, that I've talked about essentially this could possibly happen. A war between these countries could be on the verge. And I've talked about essentially April 2nd, essentially being a major situation as well, where it could be a positive event for the crypto space, according to an outcome from Bloomberg, or it could be a negative scenario, according to many other sources. We just have to see how April 2nd plays out. But everything has been priced in a way. And the only thing I'm trying to say is what's going to happen after the war scenario and after the tariff situation is going to be incredible. And while the tariff situation is happening, while the war scenario is happening, behind the scenes, the regulations and the foundation is being laid for the crypto space. And certain crypto projects are going to do extremely well. One of them being XRP. So don't forget, essentially don't forget about the long-term effects. Don't forget about the bigger picture. Don't focus too much on the short-term picture. The short-term picture being tariffs and war scenarios. Long-term picture being Ripple case ended, rules and regulations are happening behind the scenes, the foundation is being laid, and every government body inside the US, SEC, CFTC, FDIC, CFPB, OCC, they're all pro-crypto, they're all coming together to help to build that foundation for the crypto space. So don't panic of what's happening inside the crypto space. See every opportunity as, a good thing inside the crypto space, inside the market space. And I will be seeing everybody on Monday for episode 289 of the CMF Live. If you're watching this for the first time ever and you're wondering to yourself, what is this and who am I? This is the CMF Live. It stands for Crypto Mouse Family. And this is episode 288 of the CMF Live show. And in this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations. And we always do Q&As as well. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And you can tune into this live Monday to Friday, 11:25 p.m. UK time onwards. If you watch this for the first time ever on YouTube, if you watch this on YouTube, subscribe and tune in Monday to Friday. Turn on your bell notification. If you watch this on X, follow me if you already haven't during this live. Drop a like, drop a comment, retweet, and tune in Monday to Friday, essentially on this live, on X or on YouTube. I will be seeing everybody on Monday for episode 289 of the CMF Live. But before we do go, let's go inside the comment section first. Let's see what's happening inside the comment section first. Obviously, before we do go, the UK government is, yeah, I agree, 100%. Thanks, Miles. Peg, let's go. Country that are not adopting tech innovation, they will fall behind. Facts. Yes, I strongly believe that UK no happy people hold crypto. Even do I already stop the worked hard? I want to pay even penny tax to UK. Good night, Miles and all CMF. Thank you for a great live news. XRP, let's go. JP, see you tomorrow. See you on Monday, same time as usual, brother. Night, Miles and CMF. Pablo, see you on Monday, same time as usual. Good night, Miles and family. Great live. Many thanks. See you Monday. Ian, see you on Monday, same time as usual. Thanks, Miles. Have a nice weekend. CMF, see you on Monday. See you on Monday, Orphan. Thanks, Legend. Night and day, CMF. I hope you have a restful weekend, Miles. Let's go, Shelly. Thank you so much. We'll see you on Monday, same time as usual as well, Shelly. Good night, Miles and CMF. Have a great weekend. Thank you on Mike. See you on Monday, same time as usual, brother, as well. Good night, Miles and CMF. Ghost Spawner, see you on Monday, same time as usual. Have a great weekend. Let's go, CM. Let's go, Ghost Spawner. I will see everybody on Monday, same timing as usual, for episode 289 of the CMF Live. Follow, comment, like, share, retweet if you already haven't. Night, Miles and CMF. Brilliant show. As always, we thank you for your valuable time you share with us. Joe, let's go. Thanks so much for the kind words. I'll see you on Monday, same time as usual as well. Have a great weekend, Miles and all CMF. Let's go, JP. See you on Monday, same time as usual, brother, as well. Night, Miles. Let's go, Cali. See you on Monday, same time as usual as well. I'll see everybody on Monday, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. I'm hoping everyone has a great weekend also. See everybody on Monday, same time as usual, CMF, 11:25 p.m. UK time onwards for episode 289 on Monday. Have a great weekend. See you on Monday, everyone. Like, comment, share, retweet, follow, subscribe if you already haven't. Everyone have a great weekend. Let's go, Ian. See everyone on Monday.